Hello and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching out there. Israel claiming to have killed Iran's security chief Ali Larijani, the most senior figure targeted since the beginning of the war, while Iran has rejected de-escalation offers conveyed by intermediary countries. US President Trump says that the US is not ready to leave the military operation in Iran yet, but, quote, will be leaving in pretty much the very near future. The ongoing conflict prompting the American president to postpone his planned trip to Beijing to meet Chinese President Xi Jinping. And in the latest monthly survey of fund managers, the Bank of America has revealed a slump in investor sentiment to a 6-month trough, coinciding with a jump in cash levels from February's 3.4 to 4.3%. 45% of respondents forecasting higher inflation over the next year, with interest rate expectations also jumping. US Treasuries rose modestly ahead of the Federal Reserve's policy decision, the 10-year at 4.2%. The Australian 3-year government bond yield fell following the RBA's split decision to hike the cash rate by 25 basis points, with markets pricing in about a 50% chance of another 25 basis points at the next meeting in May. The US dollar little change, the Aussie dollar holding at 71.1 US cents. And let's get more on that with Zoran Kresovic from Blueberry Markets, who joins me now. Zoran, the Aussie dollar, one of my guests said probably surprising it's not higher than where it is given the interest rate differential now.
Absolutely. Thanks for having me, Juliet. I could agree with that, but on the other hand, my counter argument is also the fact that, we've seen kind of all this priced into the market to an extent. I mean, just prior to the RBA's meeting yesterday, majority of analysts, or in fact actually top 4 banks in Australia, priced in for 80% chance that we'll get 25 basis point hike. So I would like to think it was more of a dovish hike as opposed to a hawkish hike in my eyes, and I think that's actually very relevant when you have a look at the participants within the meeting, where it wasn't an anonymous decision, and it was actually kind of a split decision where 5 participants actually voted for a hike whilst 4 didn't. So that actually weighs on the overall sentiment and overall move in Aussie, but nevertheless we are cracked above the 71 cents, so we are probably likely to gain a bit more momentum and head higher.
All right, let's have a look at what the momentum is, that we're seeing in oil, particularly about the impacts here on inflation and this long-term downtrend. What do you see as the next movement?
Yeah, that's a really good question, and just waiting for your meeting, I saw what you guys posted about U.S. President Donald Trump saying that this war could be very soon over. I actually tend to very disagree with that statement. I think this is not going to actually end anytime soon. I think there's a number of reasons for that. I think markets haven't actually priced that as of yet, or in particular equity markets have actually dropped globally 5 to 10%, which is a normal pullback. But if you have a look at the crude oil, we can actually see that the prices have gone exponentially higher. And whilst we are seeing sub $100 on crude oil, or around $95 at the moment, the spot diesel prices across the globe are actually gone through the roof, and that obviously feeds into the global demand and overall inflation. And if we take that one step further, then obviously we could be talking about major supply disruptions in the global oil supplies, and the longer this takes, the longer it could be inflationary and become a major challenge. We can actually see the crude oil has broken a long-term downtrend that I've been talking about for the last 9 months or so, and the price seems to be consolidating around $100 at the moment. But Strait of Hormuz is a big an important point, and if there is no de-escalation, we know that 20% of the global oil supply comes through that region. We could be seeing some major disruptions, and specifically referring to some of the Asian countries like India and China. So overall, I'm still thinking the crude oil is going to continue head higher. I still think there is, this war is not going to end anytime soon. And the longer it takes, the market is going to take quite a defensive stance on that, and the market is going to eventually start pricing that in.
Yeah, it's a big, interesting chart, that one with that spike up there. Also, what's been spiking, not quite to the same extent, but 8 days of gains in Bitcoin, Zoran.
Yeah, so heavy influx coming into the Bitcoin itself, and we can actually see that $70,000 level has actually provided quite a bit of support, and it looks like it's gaining a lot of momentum and a lot of demand. We're actually seeing a major influx of institutional rotational play over the past week or so, for the week ending from 13th till 18th of March. So we are back in green when it comes to the ETF influx in crypto. So obviously investors or hedge fund managers are obviously pricing in these levels as discounted. But I want to take one step back and have a look at this chart with a little bit more conviction and compare the left-hand side to the right-hand side. And what we've actually seen in 2022 up versus the current playbook is actually something very, very similar. At that time, price has actually reached around 69,000 and dropped around 75% before Bitcoin consolidated, gained some ground, and went for a stellar bullish run for the next few years. We've actually got a very, very similar playbook here on the right-hand side of the chart when the price has actually reached that 176,000. So we can actually see a downtrend line in dashed line is actually hugging the trend overall. The trend is still fairly down. The price has retraced around 45%. But if history doesn't repeat, but it rhymes, if we do compare that to the move in 2022, then we could be seeing Bitcoin actually this move counter trend and prevailing trend to continue if it can reach below 70,000. However, that's yet to be seen. We need a confirmation that this is the bottom. If this is the bottom, given the fact that US dollar is obviously weakened over the last couple of days, there is less interest in gold and silver for a bullish move over the past last couple of weeks, then Bitcoin could be the one driving all the headlines and hopefully getting some momentum for another push higher.
All right, Zoran, really appreciate your insights and those very exceptional charts. Thanks so much, Zoran Kresovic there from Blueberry Markets. That does it for this edition of The Trade. Be sure to join us next time.